Let us begin, Hans, with the strong dollar, or maybe it's the weak dollar policy of Mr. Mnuchin. And now we have a fiscal overlay. We've got the tax cuts. We've got the new budget is proposed and signed by the president, and even the new president budget of the last few days ago. What does that fiscal overlay do to dollar dynamics?
So this is obviously a fiscal expansion within an economic downturn. And as such, it is not textbook-like. When you compare the current tax policy with the tax policy of the previous Republican President Bush, and at that time in 2004, 2005, when that was implemented, there was as well a lot of hope that that would boost U.S. productivity, and it did not. So the question is this a similar type of outcome?
Right.
So the dollar, the performance is going to depend on one thing. Is this fiscal policy going to increase the growth potential of the U.S., or is it going to lead to a one-time demand push? If it is going to lead to a one-time demand push, you are left with a twin deficit problematic. And you all know that that is not going to work well for an exchange rate. So when you look at the size of this fiscal impulse, and you think that simultaneously there are measures taken to keep the economy strong and growing, you will not have the domestic savings generated to cover up for the fiscal deficit.
Right.
So that by definition means that the current account deficit of the United States is on the rise.
Well, it sounds...
That needs...
Well, go ahead, please continue.
That needs foreign funding, and this foreign funding obviously needs to find the right conditionality to join the United States. That either could be a weak exchange rate or a much higher yield.
Yeah.
We would put our money on a weak exchange rate.